Welcome to Machine Minds, where technology and humanity meet. I'm your host, Greg Terrusian, founder of Samson Rose, a recruiting and search business focused on the robotics and AI industries. The Machine Minds show is where we dive deep into the intricate world of robotics and artificial intelligence. As a staffing industry leader with a passion for the frontiers of technology, I'm pleased to be bringing you intimate conversations with the founders, investors, and trailblazers who are at the heart of the AI and robotics revolution. In each episode, we dig into their journeys, the applications of the products they're working on, and the breakthroughs that are shaping our future. Join us as we explore how these machine minds are transforming the way we live, work, and understand our world. Whether you're an entrepreneur, a tech enthusiast, or just curious about this amazing field, you'll learn something new with each episode. Let's delve into the extraordinary. Let's delve into Machine Minds. Hello and welcome to Machine Minds. I'm your host, Greg Terrusian, founder of Samson Rose, your robotics talent search partner. And on today's episode, we are joined by Will Coffield, co-founder and general partner at Riot Ventures. Thanks for being here today, Will.
Great to be here. Appreciate it, Greg.
Yeah, glad we could get this scheduled. So let's jump into it.
Let's do it.
Yeah, let's start with you sharing a bit about your early career, what that looked like before Riot Ventures, and if there are any pivotal moments or key influences that you can think of.
Yeah, so I am maybe the rare career VC. So I came right out of undergrad where I studied finance and economics, and I went right into a venture capital firm. So I joke, but it may be serious that I have no transferable skills. Venture like really better work for me. But I went right out of undergrad. I went to a small venture capital firm in Boston that was a true early stage generalist. It's sort of like a retro shop, if you were to look at it, it was four really smart, really talented partners who were true generalists with more of a finance and like business operating background that were doing everything from pre-IPO biotech to incubating enterprise infrastructure businesses in the office and doing like funky kind of private equity deals in the middle.
I was going to say, it sounds like a PE play a little bit.
It was like 1980s venture capital, which is like, we just like know how to make money, and we can go make money in any sector at any stage in any geo, because we are fundamentally underwriting a team with a unique edge in a market that we think has momentum and, interesting structural dynamics for the company in question. And it was a quirky but epic way to start my career, because I got to see the entire life cycle of private market investing. But I started my career in 2011. And when I look back at, sort of where we have gone as an asset class, 2011, 12, 13 was really when specialization in venture capital, particularly like both stage and sector specialization, started to become a major competitive differentiator. Right. And I started studying firms, in Boston at the time, like Founder Collective and First Round Capital and others that had really, really specialized around a stage and the types of businesses and the types of challenges and opportunities that those businesses experience at the seed stage, and how to position yourself as the capital provider of choice to that audience of founders. And it became obvious to me early on in my career at Saturn that if I was going to have a great career as a VC, which, I fell in love with this business right out of the gate, that I needed to specialize. And so I spent, 12, 13, 14, 15, 16, really, I guess sort of going back to my my economics studies, if you will, and looking at the flow of capital in the venture asset class and looking at where there were maybe dislocations or overlooked areas that were pivotal to the global economy, but that were sort of chronically underfunded as it relates to innovation dollars. And it was pretty, like, I wish I could say it was like a ridiculously unique insight that I had, that the industrial sectors of the economy were pretty undercapitalized from an innovation perspective, but is kind of obvious. And as I started asking about, like, hey, like, why are we not doing more in advanced manufacturing and robotics and industrial IoT and aerospace and defense? It wasn't that the venture ecosystem in, like the early 2010s didn't recognize the importance of those sectors, but it's that I think there was still a lot of scar tissue from the first wave of clean tech that people had gotten torched on, that was keeping everybody on the sidelines from going into those places, and had created this sort of like moniker of like, we just do software. We don't want to touch hardware. Full stack businesses are a nightmare. We all lost money doing that. And like, we learned our lesson. We're sticking to enterprise SaaS. We're sticking to fintech. We're sticking to digital media. We're sticking to direct to consumer e-commerce.
Right.
And that felt wrong to me. And so I just started going deeper and deeper in my exploration of these industrial sectors. And eventually, I think, like, built enough unique perspective and enough personal interest to have a thesis there that ultimately underpinned the co-founding of Riot Ventures along with my partner Steve Marcus in 2017.
Amazing. Yeah. So you could see those gaps there and you were like, that's wrong. We need to provide for that kind of area of innovation, those companies, the ones that people are scared of now because
and I think again, it was like, I in hindsight, it feels a little bit obvious, right? That if you just look at the sheer magnitude of these sectors, manufacturing, construction, defense and aerospace, supply chain and logistics, energy, et cetera, they are so fundamental to life on Earth. They are all of geopolitics to a degree is underpinned by these sectors. And that as we approached an age of artificial intelligence, jumping the chasm from the laboratory to industry, the implications for those sectors was going to be so unbelievably substantial. The wave of value creation that was going to, be a part of the intersection of those old line industries and advanced artificial intelligence is going to be so massive that, I think for a young investor 10 years ago, it was a somewhat obvious place to decide to dedicate yourself.
Well, I mean, I'll play devil's advocate and say yes and no, because anyone that you talk to that now they're like, oh, I've been focusing on hard tech, deep tech, robotics or whatever for the last 5-10 years, there just hasn't been the capital there, right? Or like the support. So some people would, and I was having this conversation earlier, if I was working in a larger recruiting firm, for example, over the last 4 or 5 years, there's no way I would have been able to double down on the space that I have, because there just simply wasn't, in your terminology, like deal flow, right? Or returns. Like there wasn't hiring, there wasn't investment, but believing in it and the long-term vision, I think that is what probably separates you, because you can see that technology in time is going to do what it needs to those spaces.
Yeah, and I would say, like, I moved to Los Angeles in 2015 to open the West Coast office of for my previous firm, and that was both strategic. That was strategic for a couple of reasons. Like, one, the LA ecosystem relative to, say, the Bay Area looked like a greenfield opportunity for me.
Mm-hmm.
Two, as I was going down the rabbit hole on these industrial sectors, like Los Angeles has such an incredible sort of embedded industry. Like this is the center of the universe for aerospace and defense, massive manufacturing infrastructure in LA, massive shipping and logistics infrastructure in Los Angeles. And so like the raw ingredients were in LA, but like the big thing, the light bulb moment, that I think really compelled my interest um, into a more concrete action plan was um, seeing how big a business SpaceX had built in 2015 and looking at when I first got boots on the ground in Los Angeles, the density of talent that SpaceX had aggregated across everything from software engineering to electrical engineering, mechanical engineering, just like across the board. And I think people in 2015 were really starting to appreciate just like how massive, how substantial the implications of SpaceX were going to be, both like economically for the size of that business, but also just for the like broader ecosystem implications with regard to that much talent having been concentrated in one place. The rubric most people have is like, oh, well, like there's gonna be a mafia that comes out of SpaceX. There's going to be an entire ecosystem of founders that can trace their lineage back to this incredible moment in time, this incredible place where incredible things were accomplished and incredible value was created. And that really invigorated, I think, our founding of Riot Ventures around like a spark that was going to make it concrete not only for talent but for capital, that you can go build $100 billion plus businesses by focusing on these industrial sectors in these scary old entrenched industries by wielding advanced full stack interdisciplinary technologies. And that we look at like that is our North Star, right? Is SpaceX, and has been a source of insane inspiration, I think, for us and for an entire generation of founders that we've been fortunate to get to back.
100%. Yeah, you put that really well. It's true. They created that ecosystem, and the amount of founders I've worked with that you can trace back to SpaceX as well. Because it's not only the amount of talent, but it's also the bar. Like they have a high bar of people that they hire, and they're obviously wicked smart in the way that they work. So it's just like it's embedded in so many people. You see it, you got your Microsofts and Amazons that have done the same thing up in Seattle, and then or Snap in LA before for the software side of things, and things like that. So it's amazing to see on the hardware side of things. Before we go off the point, why VC though? What, straight out of college, why did you get into VC? Why didn't you go like consulting or banking? Like, what was it that actually drew you to that this space?
I was originally gonna go. I was really, really lucky that I had I had two mentors in high school, actually. Wow. Who were both private market investors. One of them on the like true private equity side of things, the other on the venture capital side of things. So John Camp on the private equity side, Phil Herget on the venture capital side. And both were just like like as a young guy, were like just two of the commanding I don't know, like male figures in my mind of when, when you're 16 years old, you're like, man, I want to be like that. Yeah. And it was interesting to me that they both did, like private market investing. And so I started in high school kind of going down the rabbit hole of like, what do these people do? What is interesting about what they do? How much money can you make doing that? And so I just developed an intrigue. And so actually all through college, I had been of the perspective that I wanted to go be a VC. I had thought that my path to doing it was going to be through investment banking. And I had actually gone and pursued that route and gotten an offer to go do that in a great analyst program at one of the bulge bracket banks. And then one of those mentors, as I was describing the sort of like the path that I wanted to take to go get to VC, which was, investment banking to an MBA to a post MBA associate role, they were like, I actually think you might find it more valuable to go the startup route.
Mm.
And to go work for an early stage technology company in a sales or biz dev or ops and finance role, and use that as a jumping off point if what you really want to do is early stage venture, which is the conclusion I had sort of come to early in my career. And so I bailed on the job offer I was supposed to take to go do investment banking, which I'm eternally grateful for, the advice to do. And I ended up going straight into VC, mainly through like a relentless networking campaign where I was meeting all the VCs in Boston, trying to get them to help point me in the right direction of their best portfolio companies that I should go try to like beg for a chief of staff role in. And through the process, I ended up like mapping the Boston ecosystem really well. And so Saturn brought me on under the guise that I would do the associate role for them for a couple of years. Then I would jump into a portfolio company, and then I would come back or continue my career.
Very cool. Very cool. Yeah, makes sense. I'm sure the investment banking route would have taken you somewhere very different. But it's rare that.
Yeah, I don't know. There are some great VCs. I've got a lot of great peers that did that, and it served them incredibly well. I was just lucky that and look, I'm of the opinion, I think there are a lot of opinions on how to end up being the best VC possible, and the types of experiences that you need to have before becoming a VC in order to be a good VC. I'm just of the opinion that this is a game of compounding knowledge and skills, and that the longer you can be a VC, if you are really dedicated to it, the better a VC you will be. And I'm fortunate that I have accrued a tremendous amount of venture experience.
Yeah, it's pretty unique to have that foresight from high school that you want to go into VC. I was having the conversation the other day about that with an engineer who had no family in engineering, no awareness of it, didn't have any friends who were engineers, but knew from high school just because of I think it was like an open day with a company or something like that. How important do you think something like that is for the venture world?
Yeah, there are a million different pathways to the venture world. I feel really lucky that I had some level of exposure to it early on, and that I'm really fucking stubborn. And so when I decided that it's what I wanted to do, that I just put the horse blinders on and went for it, and then it, at least so far, has worked out. But I think many of the best VCs come to this as a second act in their career, and they're incredible at it. And so I don't think there is one rubric for how you can be successful in this game. I think it favors folks that are incredibly competitive, incredibly patient, are willing to be contrarian, and who thrive in thrive in uncertainty. Which is a lot of what at least early stage investing is about.
Perfect. Well, let's talk about more your entrepreneurial journey, founding Riot Ventures. You mentioned to us a little bit earlier about the gaps that you saw and why you're passionate about this. But were there any initial challenges that you faced when starting the company, or anything that you can think about, like going from that ideation phase of, hey, we want to start this, to help this sector, and how you ended up establishing the company?
Yeah, I mean, I Steve and I really conceptualized Riot Ventures in 2014, 2015. And but I think we both had a really strong appreciation for how substantial a commitment this is, and that this is an entrepreneurial journey, and that we better be sure that we are great co-founders, that we complement each other really well, and that we are a good founding team to go get this company off the ground, not just good investors that want to do similar things, but that we're going to be good operators. So we actually spent 2 years really getting to know each other and testing how well we complemented each other there, and making sure that we really trusted each other and making sure that we would be good co-founders. And when we started the firm in 2017, I think, again, like, I am shocked when I go back and I look at our old pitch deck, how good it was, like how good the idea was. But I think, like any good entrepreneur knows, like, the idea is only as good as your capacity to execute against it. And, we set out to raise a $25 million first fund, and we raised 10. So like the first big challenge we ran into is, I think in 2017, it was, like the LP community was pretty skeptical of, I think, what is now a very popular investment strategy that seems a little bit less controversial. And so, like, the first big challenge that Steve and I ran into is, like, we raised less than half the amount of capital that we originally set out to. And I think, fortunately, again, because Steve and I had really tested the dynamic between us, neither one of us looked at that as a failure. We looked at it as a challenge. And it was like, okay, well, like, we need to go prove that we are the firm to bet on, and that this is the investment strategy that is going to drive extraordinary returns for LPs over the next 15 to 20 years. So that, like, first big headwind that we hit was fundraising. And we basically just put our heads down and we went to work getting into extraordinarily strong companies like Shield AI, and Oxide Computer and Parallel Systems and Elementary Robotics in that first fund, and proving to ourselves and to LPs that not only were there extraordinary companies to back along the lines of this thesis, but that we were going to be a very sought out capital partner to those founders. And this is also when we made investments in Desktop Metal, in Toast. That first kind of generation of investments that we made has turned out to be pretty extraordinarily strong. That put us in a position where then, we went out to raise $75 million for our second fund in 2022, and we oversubscribed it to about 90 million. And then we're able to tack on a very substantial growth platform alongside that allows us to write $25 to $75 million checks into, the kind of breakout winners from our first and second funds, like Oxide and Shield and True Anomaly and others, where we've become very, very large, in some cases 9-figure investors in those companies. And so, like, fundraising was the first real headwind we hit. And both Steve and I took it as a major call to action. And we went and, like I think any good entrepreneurs, we figured out how to fix that problem with our business. And now we're kind of at a place where, we have solved the capital side of the equation. We have access to all the money that we need. We have an extraordinary group of limited partners that have supported us and are continuing to support us as we raise our next fund. Now we need to scale the team, right? We're an investment team of 4. We now sit on a lot of boards for a lot of increasingly consequential companies. We now need to go scale the team, probably from a team of 4 to a team of 8. And it's, kind of a new challenge for us at Riot, and, another one that I think we'll do well at.
Yeah, those are some great names there in the first wave and second wave there of investments. So it's great to see. And anyone listening to this who's interested in joining the Riot team, we'll give you all the details later on where you can find them.
Please do.
we touched on your investment thesis a little bit earlier on, but how do you decide? Obviously, you want to be the go-to capital partner, like you mentioned, for the companies, but how do you identify which companies you want to approach and you want to invest in, and what makes that startup stand out in the space?
In the degree of difficulty in the end of the pool that we are playing in, I think is much higher than in other areas. And what at least our perspective is that favors a sort of N of one dynamic where for any given opportunity that exists in the market, for any given sort of like structural opportunity, we think there's going to be an N of one team. The team, the not fucking around team that is going to aggregate the bulk of the human and financial capital and the bulk of the customer attention on their journey to ultimately building a big business. So what that means is that we are constantly scouring for like big opportunities that will exist in the market. And then we are screening for, is this the N of one team? Is this like going to be the team, the SpaceX team, where it's like there are lots of launch companies, but there's really one really consequential launch company. And then there's a huge fall off, and then there's a couple of secondary ones that, by the way, are still good businesses, right? Like Rocket Lab, I think is a badass company, but it is like operating in SpaceX's shadow.
Right.
And so we spend a lot of time asking ourselves, is this the N of one company? And what I think the N of one company looks like, or the N of one team looks like, particularly at seed, is a team that possesses an outrageously unique X factor when it comes to having the customer's ear and understanding the roadmap for customer demand and customer value delivery. They possess a unique capability around recruiting. They possess a unique capacity for delivering complex technology against their unique perspective of customer demand. And customer, the customer's problem. And they have almost this evangelical capacity where they are just going to suck the air out of the room when it comes to their domain expertise. I think, I think True Anomaly is a great example of this, where like, if you look at the space defense market, right, you look at this kind of like emerging structural opportunity where space has become a contested domain. It has gone from being a peaceful domain to being a warfighting domain, where we have, every superpower now has critical military and civilian infrastructure in space that is insanely important to terrestrial activities. And we are in a foot race with China and Russia to figure out who is going to establish a military deterrence first in that space domain. It's kind of a massive greenfield opportunity as we see it. And in our opinion, the N of one team that is going after that opportunity is True Anomaly. The team that has the most unique insight into the demands, the problems, the opportunities that the Space Force is facing is True Anomaly. The team that has the most unique access to senior leadership at the Space Force is True Anomaly. The team that is aggregating the most talent as it relates to this mission is True Anomaly. And we think they are the highest likelihood winner in the space defense realm. Still a long way to go, still a lot of execution. But like, I think that's a good example of sort of what we look for when we're thinking of the N of one team in any given kind of sector.
That's great. Yeah. Thanks for sharing that. It makes a lot of sense. These projects, they've got such a long time horizon. Lots of money needs to be invested. This isn't like a, hey, 3-year turnaround type thing. So if you're going to be committed for the long term, follow on rounds and everything like that, makes a ton of sense why you look for that. And for your own conviction, as well as the talent pool side, right? Who else are they going to want to join if it becomes a competitive space?
It's a really small talent pool. And if you're going to go compete in that talent pool for the absolute best engineers in the world, you have to be the N of one company.
Yeah, so true. Yeah, it's a unique way of thinking about it, but it makes a lot of sense. I haven't heard that before. What trends are you excited about at the moment, and how do you see these shaping the future of technology? Obviously, this space domain that you shared, I don't think a lot of people are even aware of that. You know, the race that's going on right now and the importance of that. But are there any other areas that you think of?
You know, we're spending a lot of time in robotics right now. I think we started investing in robotics in 2017, and what we've seen is a really slow burn over the last 7 or 8 years for robotics companies, where a lot of these companies, it has taken a really long time to kind of close the gap from a performance perspective and go from like 95% readiness to 100% readiness in these dynamic industrial environments, and where customers have been, I don't know, it's been sort of a war of attrition with customers, right? There's been a tremendous amount of interest in what's going on in robotics, but there hasn't been a massive amount of budget broadly available to go invest in mass deployments of robotics across industries. Obviously, areas like robotics and warehouses, I think, have led in that realm. But by and large, I think there was maybe a little bit of a false start 5 or 6 years ago on the readiness for robotics adoption. That was partially market and customer oriented and partially technology readiness oriented. A lot of the advancements that have happened in the interim around the sort of like digital intelligence that people are experiencing through platforms like OpenAI and Stable Diffusion and Anthropic and others right now, I think is representative of what is also happening in embodied intelligence. And that gap from a capabilities perspective on robotics has closed very, very quickly over the last 18 months. And we're seeing a lot of robotic solutions that were finicky 2 years ago look pretty bulletproof right now, and very easy to deploy, very, very high value to customers. And we're seeing, I'd say, this like technology readiness evolution intersect with the sort of like structural labor shortage on the industrial economy side of things finally reaching a boiling point where now customers are saying, okay, we're done fucking around with innovation projects. I want to go deploy hundreds of robots throughout our facilities this year. And I think that this is creating just like a perfect storm for robotics investing over the next 3 to 5 years. And so I'd say like fund 1, we spent a lot of time in robotics. Fund 2, less so, candidly, like tracking it really closely, but we're more cautious. And now like our fund 1 robotics companies are doing really well. And we are starting to see a lot of really exciting opportunities in robotics. We've just closed 2 robotics investments in the last 60 days. We're super excited about it. I'd say like we're rotating back into that space really heavily at the moment.
Can you share who they are? Yeah. Is that public?
It is not public. You'll have to wait to see the announcements on that.
Okay.
But one is, there is one that we're really excited about that will probably get announced in the next 2 weeks. That is, it is a robotics play for advanced munitions manufacturing, and a crew of repeat entrepreneurs that are stepping into the breach to shore up our domestic, sort of munitions manufacturing industrial base with some really badass robotics and advanced manufacturing techniques.
Cool.
They'll be a client of yours, Greg. I promise.
Glad to hear it. Yeah, I will keep a lookout, and everyone will have to follow you and Riot to see that. Let's shift gears quickly into the team dynamics and
Yep.
leadership, because obviously in venture capital, the strength of the team can sometimes be as important as the idea. Sometimes when you're investing at that really early stage, from your perspective, how much weight do you put on the importance of that team dynamic and the founding team?
Yeah, I mean, it's the foundational investment decision. We have on several occasions backed great teams who were working on an idea that we were, 6 out of 10 on, right? Like 10 out of 10 team working on a 6 out of 10 idea. That's investable, right? A 6 out of 10 team working on a 10 out of 10 idea, we pass on that all day. So we are maniacal about looking for really, really strong teams and frankly following their lead on the idea. Like, we don't think our job is to try to impose great ideas on companies or to pick the best ideas. Like, we think our job is to identify the most exceptional people in the world and then become a support structure for how they go accomplish their vision. And to sort of challenge them to think bigger and bigger. But like, we are looking for world-class teams. And I would say the attribute that we are looking for within those world-class teams, which might be counterintuitive for an investor that focuses on such technical endeavors, is extraordinary leadership capability. Not necessarily extraordinary technical capability.
Interesting.
That is a huge component of what we look for, but like, we are looking for folks that we believe are commanding leaders, and who, as a part of that, can lead customers to engage with them before they necessarily have a complete product and to buy into the vision, who can lead extraordinarily talented teammates to come join them before the business, has material commercial traction, and who can lead investors to part ways with their capital before it's obvious that what they're working on is working just yet. And so, like, we think leadership is the fundamental trait that is the leading indicator of success for these companies. And that is like really what we spend the bulk of our time screening for. Leadership and, like, I'd say self-awareness. Because extraordinary leadership with like no self-awareness and no humility can end up being a very dangerous thing. So like, we look for folks that people want to follow into battle, but who also have strong self-awareness and humility, and can, like, I think, see the forest through the trees.
Yeah, I think that's one of the most important things of founders is that self-awareness, because not only can you be sure in what you're doing, what you've achieved previously, or your idea, you get to a point where you need to know where your capabilities fall short, where you need to relinquish control, when you're the bottleneck, or when you can actually get the help from, whether it's your partners, investors, customers, whatever it is. If you're not, it's just destructive all the way around,
Yeah, I mean, a lot of the discussions that we have with folks when we are evaluating an investment is about the evolution of the leadership team. And what we are testing for is, because I think extraordinarily confident leaders are great at delegating and great at relinquishing control of key functions where they cannot be the most talented operator in the world.
Yeah.
And so a lot of the time that we spend with folks is like talk to me about the CRO that you're gonna hire at some point in the future, and what that looks like, what the VP of engineering is going to look like, and like when the right time to bring that person in, if we're talking to a founding CTO, and so yeah, I think that's an incredibly well made point. Is it's not only about I think the confidence to lead and the expertise necessary to be backable initially, but also the confidence and the self-awareness to know where and when to step away and to bring in more senior leadership to supplement your capabilities, and to not, like I would say, hold on to everything with an iron fist.
Yeah, sometimes people just, I'm the founder, I'm the CEO, I'm the CTO. I can never step away from that, and it's tough.
It's a hard thing to do. It's a
baby.
deeply emotional thing when the business that you're building is your whole life is wrapped up in it.
Right.
And it's a lot of what we spend our time working with CEOs on after we invest is, sort of like all of these psychological trials and tribulations that you will go through in building these businesses.
Yeah.
Ranging from, like imposter syndrome early on to control issues as the business scales and matures.
I haven't heard that before. That's so valuable, in addition to obviously capital and industry expertise and all of that stuff, but coaching and helping with that psychological side of things, and just, I think, planting the seed early on that, you're going to get to a point, whether it's at your B round or it could be sooner, where you might need to add these people or shed your staff or think about your role changing.
Yeah.
So have it in the back of your mind. Super important.
Yeah. Yeah. I mean, the sooner you start the dialogue on that, the better. Because, like, again, if we're doing a good job backing people that are extraordinary and have that leadership capability, but also have that self-awareness and that humility, they will come to these conclusions on their own about what the evolution of the management team looks like. And look, when we back somebody early on, it is our belief and our conviction that they're going to be the person to take the business to its terminal state. We never back anybody that we think is the right person to be the CEO for the next 2 years or the next 3 years. We back founders that we think can go the distance with their businesses. But that role evolves and changes, and the leadership team around them evolves and changes dramatically through every stage of the business. And the earlier that we can get them developing a framework for what that evolution is going to look like, the better. And so, even at seed, we are starting to talk with founders about, once we're doing 50 to 100 million in revenue, here's what we think, the business is going to look like, and how different that's going to be from 1 to 5 million.
Yeah. And especially if they're first time founders, they probably never even thought about that stuff. Right?
Yeah. The last thing we want is for somebody to, our job is to keep you from being surprised.
Yeah.
Right. And is to always be projecting out into the future based on our pattern recognition of seeing this across dozens and dozens of different businesses at different stages, as to what you're going to experience and how you should be preparing today for the good, the bad, and the ugly of what tomorrow looks like in your company.
Yeah, it's amazing. Love that. Okay, I know we're almost at time, but a few quick fire rapid questions. Looking to the future, in terms of the biggest opportunities and challenges for VC in general in the tech landscape, is there anything that comes to your mind?
No, I mean, I think what's going on right now is everybody is starting to recognize the scale of the opportunity, focused on, these sort of critical industries and advanced technologies that are fueling their modernization. And so, I think it's a massive opportunity that there is a wave of capital coming into what used to be a very niche space. I think that's good for everybody, founders and the investors that have been here from the beginning. There are more folks for us to partner with. There are more folks for founders to partner with. And I think it's going to fuel a boom in value creation. So we're super excited about it.
Amazing. And it sounds like for you guys to evolve in response to all of that, I heard the partnership element there Are there any other things that you think as a firm, apart from adding,
Look, I think
doubling your staff?
we're going to stay really focused on being founders' first institutional partner, and focused on working really closely and continue to refine our offering as a seed-oriented lead investor, while we also, recognize that these businesses are capital intensive, and we think that in many ways, from an investor perspective, is a good thing, so long as there's a very high return on invested capital, and there's a clear understanding of how that's going to evolve. And so while we stay really focused on seed, we're going to continue to scale our capital infrastructure that allows us to be an increasingly substantial provider of capital to the founders that we back at seed all the way through their IPO.
Perfect. Okay, and finally, any advice or the most important piece of advice that you can think of for those aspiring to either get into venture or hard tech?
Figure out what your secret is. Find an area in this space that you are passionate about, and become an expert. And it sounds trite, but it's what works. And so become an expert in something, and reach out to me for more detailed advice.
Love that. Thanks, Will. Where can people find out more about Riot Ventures, follow you, and all the announcements that are coming?
Our website is a great sort of central place to learn more about Riot Ventures. And then, hit me on email, will@riot.vc.
Perfect. Well, thanks again for being here and sharing all of this. I really appreciate it. And I know that our listeners will as well.
Thanks, Greg. Appreciate it, man.
Thanks, Phil.